Hey folks, Dan Frio here with your market update for December 9th, 2024. So mortgage rates eased quite a bit last Friday. Is that easing cycle going to continue? Well, that's what we're going to focus in on today because there's only 1 month left in this month or this year. And that we're going to look at is the Federal Reserve going to cut rates at this last meeting in 2024? And then what is the outlook in 2025? The market's changed just a little bit. There's a former Fed official just on CNBC this morning, and he's saying he's only looking for maybe possibly two rate cuts in 2025. So that's what we're going to focus in on today, what the market outlook is for 2025 for interest rates. So let's get over to it right through here. Here's what we're seeing is Federal Reserve is on course to cut interest rates in December. What happens after that? So here's the economic news we have for this week, the CPI and the PPI and the initial jobless claims. This is everything that the Federal Reserve monitors. Okay, let's retract just a little bit. The Federal Reserve was created for two mandates, okay? One was price stability, aka inflation, and two is to keep employment at its maximum level, whatever that maximum level is. So if you look at this week's topic, we have the CPI, which is consumer inflation. That's the C on the front of it. And then we have PPI coming down on Thursday, and that's producer inflation. So we have all that data coming in, and then we have initial jobless claims coming in this week as well. So we're tackling jobs as well as the inflation numbers. So let's get over to CNBC. We have former Fed official right through here, Mr. Rosengren, and he's going to give us his thoughts on price cuts or rate cuts at this next meeting. He thinks it's a given, but would he vote for this coming rate cut? And then what's his projections for 2025? And he's a former Fed official, so let's get his take on this. And then when we come back, we're going to see market reactions to this and some other economic indices that he's focusing in on. So without further ado, let's get to it.
Joining us right now on the Fed under President Trump is Eric Rosengren. He's former Boston Fed president, now a visiting scholar at MIT's Golub Center. And let's break that down very quickly, Eric, what you think about that conversation. Some people will say, well, he didn't promise he wasn't going to remove him. But to me, the news was really that he said, no, he doesn't have plans to do it right now. What was your take?
My take was the same, that he doesn't plan on doing it. There's a strong reason for him. One, Jay already has been lower.
Okay, so let me put it in the context. President-elect Trump isn't a huge fan of the current federal chairman right now, Federal Chairman Powell. So he was saying, I might just remove him from office and do some other things. So he's given us his take on, can actually President-elect Trump actually remove the current Fed president in his position right now? That's what he's talking about right now. So let's get a little bit of take on this. They're kind of feud a little bit, and then we're going to go into what his monetary outlooks look like.
Lowering interest rates, which is presumably the policy that he'd prefer to see. And the second is that he doesn't have that much longer on his term. And there's no reason to get in a legal wrangle about whether the president has the power to fire the chair of the Federal Reserve if he's going to get to replace him anyway within a year.
Right. In terms of what the Fed is doing right now, you mentioned they're already lowering rates. The expectation is that they'll do that once again next week. But then where do you think things stand? Because there have been more questions about whether the Fed would take a much more prolonged, relaxed look at things before they decide to cut once again.
Well, this is the December meeting, so we're going to get the summary of economic projections, which is the committee's forecast for what they're going to do in the next year. In September, they were expecting 4 cuts over 2025. My own expectation is they're going to lower that probably to 2. And that's going to reflect the uncertainty about what fiscal policy is going to be in the coming year. And also that if you look at core prices, we're going to get the CPI on Wednesday, but core PCEs flattened out at a level that's a bit higher than they want. So over the last 6 months, it's been hovering around 2.7, 2.8%. The inflation target's 2%. So there's a pretty good reason for pausing, both with the fiscal uncertainty and with the fact that core inflation has not come down quite as quickly as they were anticipating.
Okay, so why the number here is different? Right here, when you see inflation PCE, now the PCE, this is the true inflation figure that the Federal Reserve monitors. What he's talking right now is what's called the core PCE. This is just the regular PCE. What core PCE does is it strips out food and energy costs, and that's why that number is a little bit inflated right now. That's why when he's referencing these numbers that don't really correlate with this inflationary PCE right here, that's why that number is a little bit different from what he's talking about. So I just wanted to make sure that confusion is out. Right through here, when he starts talking about meetings and things like that with the Federal Reserve, I want to show you exactly what he's looking at. So this is with the CME FedWatch tool. This is actually telling us what the projections are that the Federal Reserve is going to do at the next meetings throughout next year. Federal Reserve's meeting in 9 days, folks. 9 days. So I'll be away a couple days this week. I'll be prepping for this event plus my 2025 forecast. But if you go down through here, here's what it's looking like right through here. This number gives us, or top of the screen right there here. This is where they expect the federal funds rate to be, or this is the federal funds rate. Okay, down through here is the projected dates. So at the December meeting right now, they're expecting the federal funds rate to be at 4.25 to 4.5. There's an 85% chance. That means they're going to cut, because right now we're at 4.5 to 4.75. So you're seeing that right through there. So again, if we go to 4.25 to 4.5, they're going to cut. So what he's saying now is there's only maybe 2 projected cuts in 2025. That would be in possibly the March meeting. Or, because they're expected to cut either at this December meeting or the January meeting, they're cutting 25 basis points. So most likely that's going to take place in December. And then the next cut might be in March. And then we won't know until maybe midsummer what they're going to do. So this is just projections of what might be anticipated at the next few meetings. But let's get back to the video so you guys can understand exactly what they're talking about.
Still, would it shock you if they didn't cut rates at this meeting next week?
I think if we got a surprise on the CPI report and the CPI was much higher than expected, that it's a possibility they won't do it. I think there are going to be some members that are going to argue for starting the pause now. I would have expected more communication up to this meeting if they were actually going to start the pause. But I think this is a period where a big surprise in the data actually could make a difference. But if the data comes in about as expected, then I would expect they're going to do this cut, but make it kind of a hawkish cut. They'll say that core inflation has been running at a sustained level higher than is consistent with a 2% inflation target, and they're going to pause policy until they see more progress.
Eric, what would you be doing if you were still in the seat? How would you vote this time around?
I would be arguing for a pause at this meeting.
And that's because which data points you watch? Because you have the ability to always change and go back later, or because you really think that the next move is going to have to be higher?
I don't think the next move will be higher unless the fiscal uncertainty has some surprises in it. So normally fiscal policy doesn't make much of a difference for monetary policy, but this is an instance where there are a lot of significant changes that may occur, some of them fairly quickly. So on the positive side, you have deregulation, fiscal stimulus, and lower taxes. But on the negative side, the immigration policy and tariffs could be inflationary. The policy's not completely clear at this point. I don't know that it's going to be clear in January or February either. It's probably going to take some time to see what that policy is, but it likely will make a difference in how quickly inflation comes down.
So pretty good report there. So that's what we're seeing on that part of it. And again, they talked about the inflation numbers in the jobs reports that we're seeing right through there. So here's the backdrop that we have to look at. This is the economy at a glance. So what this gives us is where the federal funds rate is right through here. So it's 4.5 to 4.75. This is what the Federal Reserve controls right through here. This number here. The PCE, this is the preferred inflation number that the Federal Reserve monitors, and it just ticked up at the last reading. It went from 2.1 to 2.2 and then 2.3. So now we're ticking up in that area. That's where he was saying this number keeps ticking up and being a little bit sticky. The unemployment rate's helping us out. It's only at 4.2. It ticked up just a little bit at the last reading. Participation rate was kind of down a little bit, causing that. And then right over my head, you have the PCE, the production in our economy. It's still really good. The only way I think we can outrun our deficit deficit right now is we need the GDP to take a little bit of a pump up that we're seeing through there. So that's what we're seeing right through there. The CME FedWatch tool is basically telling us they're going to cut at the next meeting unless, like he was saying, the data coming in right now, if this data is really skewed in a bad way, meaning the CPI just takes a complete jump up, or the PPI takes a big jump up, we're not expecting that. But if that were to happen, maybe the Federal Reserve won't come in and cut rates at the next meeting. So that's what we're seeing through there. So then let's look at the broad indices, kind of mixed reactions right there. The Dow Jones up 7 ticks. That's not normal. And Dow Jones, or the NASDAQ, up 8 ticks. So the markets are just stabilized right now. The VIX ticked up a little bit. We're still at 13 right now on the VIX. So that means the markets are calm, but they're increasing anxieties going up just a little bit. Go over to cryptocurrencies. It topped 100,000 over the weekend once again. I think it just did it again. Yes, it did. 100,400 we're seeing there. And then we go over to oil to see how inflationary numbers are looking. And oil's up 1.7%, but we're still under $70 a barrel. So no huge concerns there, but we're going to monitor the Middle East and all those elements out through that area there. So that's basically the report this morning. Not a lot of details coming in. There's just market reactions to comments people have on Wall Street and the broad indices in the major markets. So that's what we're having right now. If you want to learn more about me, what do I do? Well, my name is Dan Frio. I got to roll this down a little bit. My name is Dan Frio. I'm actually a mortgage loan officer. I'd love to win your business. Now, you might be saying, Dan, you probably don't work in the areas I work in. Well, I do, because I'm licensed in all 50 states as well as Puerto Rico. I'd love to assist you. If you're looking to buy that first house, maybe you're looking to refinance. Maybe you're looking to buy an investment property. We have investment programs like DSCR, bank statement programs. Maybe you're looking for a reverse mortgage. Maybe you aren't. Maybe you have a parent, a relative, a grandparent that might need a reverse mortgage. Please reach out to us. In most cases, we can save them thousands and thousands of dollars when it comes to reverse mortgages, and we'd like to help you there as well. So again, my name is Dan Frio. Check us out at therateupdate.com. If you want to put in your application, check and see if you could get qualified. You can click right here. But before you do that, if you want to check or get a consultation call set up with me, Alan, or Dave, click right over here and just schedule an appointment before you put in that application. We can answer all those questions that you have. Many of you might be saying, well, this is a dumb question. Nothing is a dumb question. Please reach out to us. We would love to help. So first step I would do is schedule an appointment. If that's not it, go ahead and hit the apply now button. You'll be on your way. Or you can call us. You can scroll down the bottom of the website, and right over through here is that information. It's 844-775-5626, or you can reach me personally at dan@therateupdate.com. So thanks so much for watching. I'll be back here at the closing bell to let you know how all this mess ends for the day. Thanks for watching. See you then. Bye-bye.